this on YouTube, but I'll try. Breaks it down right here. Come on. Oh yeah. Remember when YouTube used to be cool? You could just play music and just dance and sing, and they didn't warn you about things. Anyway, I put that song on later. What's up, YouTube? I think I might just ruin the video, but sometimes they give you like 8 seconds. That's Arcade Fire. This is Arcade Fire. The name of the song is Here Comes the Night. Or is it Here Comes the Nighttime? Let me get it right. I think if I establish the fact that I don't own the song, and I'm just a big fan of Arcade Fire. Arcade Fire, if you're out there, can I use the song as a bed to my video today? See there, good. I need written approval, right? But what's up, YouTube? If you guys don't know me, my name's Kenny. That's my daughter over there. If you Google me, I've been making videos since she was an infant. She used to sit here while I would trade. My son would be on my lap. My infant little daughter would be here. I'd be holding her up so she wouldn't fall over. And my son on my lap, and I was trying to trade and do a YouTube show simultaneously. Yeah. And the one thing I've learned, don't try to trade distracted. It doesn't work. But what I have learned from all these years of experience is that when you do find something that works, just do that until it stops working. And right now, it has been since I blew my shit up, and I'm talking about I gave back 10 years of money in over about an 18-month period, couldn't get my head out of my ass. And I was on the verge of, having to sell blood and sperm, and nobody wants that coming out of me. So, I had to take my big hit on the QQQ short, and, then I even tried again, and I took another beating. And, it wasn't until COVID, so the market actually did sell off. It's not like I was going to hold my short for 6 years and let it go $4 million against me. But what I did learn from that is legitimately the market never goes down. Sure, it goes down from time to time, and sometimes it actually goes down for an extended period of time, but bear markets always end. And when they end, the enormity of the up move is something that it's hard to fathom. That's why I was such a huge fan of Carvana at $5, because the lesson I learned is that the shorts, and again, I'm still a bear. I'm not going to change. I still think most stocks stink, but you can't fight the QQQ, right? Most stocks still do stink. If you do the research, most stocks still are awful. And I'm talking about most, like 75% of stocks are garbage. And they do inevitably go to zero, never to be heard from. For instance, some of the stocks we're trading today probably won't even be around three years from now. Today we'd made money on a stock called Veritone. Used to be a high flyer. Imagine you're in this stock at $70 for the last 3 or 4 years. You're never getting your money back. But today, it was one of our favorite ideas. And let's see, if you own the stock, let's see, again, I know, and my friend, if you're out there, I know you can't see my charts when I start looking at charts. I understand that. So the guy that's going to say, hey, how come you don't show your charts on the YouTube show? I have a website. It's called hitthebid.com, formerly Suck My NASDAQ. Remember those days? I don't even have the hat anymore. I don't even know where my hat is. I lost it. Oh, there it is. This hat's illegal in 38 states. I was a failed comedian who started trading, and I was like, hey, maybe I could be funny and try to make the market less boring. Anyway, let's fast forward to what we're doing today. So, most stocks stink, but what we do now is we accept the fact that most stocks stink, and we just trade, right? We get an opportunity to trade. And again, back to the Carvana, the reason I loved Carvana so much is the lessons that I took, because shorts always overstay their welcome. And one thing I've learned, not the one thing, but shorting is short-lived, and you're going to die. You're going to go broke. The the odd part about shorting is that most stocks stink, but you can't short the market. Dow Jones, SPY, Q. They perpetually go up. So anytime you're betting against it long term, you will lose. So taking all that into consideration, that's why when the market does pull back, right? And people are still talking about recessions and shorting and insiders not buying their stock and all that negativity, the negativity has already happened. So now the reason I loved Carvana more than just the chart was that people were still talking about this stock as a short at $5. You're only going to make $5. Why would you short the stock at 5? Even on a squeeze, a small short covering squeeze rally gets you 1750. And that's how the whole trade started for me. I was like, hey, look, if it could just turn here, break 750, 750 gets you 10. The shorters that are in the know say, oh shit, we got to get out of this. It's over. And if you're short from 250, let alone 375, where Carvana came from, of course you're covering. So when I looked at that chart, I was like, the short covering alone could get you back to $58. And then real momentum will kick in, because just like any other shiny object, hey, what's this? Hey, Carvana. Oh my God, Carvana's coming back. Nobody cares that they didn't buy it at 7 and 12 and 17 and 38. They see a stock that's consolidated between 37 and 50. And they say, hey, if this thing breaks 50, I'm in. So then I said, hey, if it breaks 58, it can go to 96. So I bought some $70 calls for April as a goof at $5. They went to $1, remember? And then they went to $25. I'm out. And now, to continue the story of Carvana, I'm done. The risk reward is no longer in our favor. Who cares if it tacks on another 20 points from here? It's an $80 stock. If it tacks on another 40, who cares? We won. But remember the last part of the story, I said, once all those analysts who are telling you to short it get their ass kicked, those same MBA morons who think they know everything, and they know nothing, because again, 2008, what was it? It was created by morons and criminals. Again, that's why I hate this industry. But the same people that tell you to buy something at 350, they tell you to sell it at 5. And then now that it's gone from 5 to 80, now they're upgrading the stock. Don't you see the folly in that? Now I hate it. Now I don't care. I'm out, and I'm rooting for it to go to 0 now. Now I'm on the other side. Stock went from 5 to 80. You walk away from the casino table right now. You walk away. Cash in. Go see a show. You got 10,000 other good ideas. You take that Carvana money and you make it work. But let's go back to day trading and consistency. Consistency is all that day trading is about. And what I found hard as a day trader is to separate the swings, the selling of options, the long-term holds. I sell puts, I do short strangles. And then when I see just something happening today, I lose my focus on what I think is going to happen 6 months, 18 months, or 2 years from now. So now that we've won, I'm done with swinging, and I'm done with a lot of the positions except for Path, CCC, Palantir. I got naked puts on them. I don't really have to get out of that stuff because they're all going to expire worthless. SOXL puts. I mean, do you know where we started selling SOXL puts 6 months ago? I mean, it's almost comical. I started selling the Augusts. I can't even find them. Hold on a second. 6 months out. I love selling premium, but then when they go up so much, you're thinking, hey, if I just would have bought one call, I would have made 20 times what I made on selling these puts. Oh, not the August. Where are they? They were leaps or something. No, they still have a penny bid. The May 5s. So the May 5s, I think they were 50 cents at the time. This is like 6 months ago, whatever. Anyway, but let's focus on instant gratification, right? Instant gratification, consistency, and if you're looking to do this for a living, for me, it's kind of a hobby / living right now. But if you're looking to do it consistently, you have a goal, right? You have a trading goal. That's just your P&L. But more importantly, let's go back to consistency. The only thing I've seen that consistently works is trading stocks that are in the news, a la earnings, around volume weighted average price. And considering I've been in the industry for 30 years now, which is insane, I made it. Yippee-ki-yay, I made it. Blown myself up 3 different times, but I made it. The only thing I've ever seen that's as consistent, there is nothing as consistent as trading around stocks that are in the news when they report, trading around VWAP. I've never seen anything like this before. And it's almost bewildering. And it gets to the point where you start to say, nah, it can't keep working like this. And then you don't do a trade because you kind of think it's just not going to work just based on that premise. It can't keep working this well. Oh, it worked. And then another one shows up. Nah, this one ain't going to work. Oh, it worked. And then what happens is you chase that same name. So you're nervous because you're bewildered that it keeps working. Then it starts to work, it keeps working. Then you finally get in, it pulls back. You say, oh man, I just chased, I got to get out of this. And you take a small loss and you say, oh man, this day trading shit doesn't work. You're doing it wrong. You got to be one of the first, you got to be the first one in or the second one. And that's what VWAP does for you. It's hey, do it. So, I came in, I know you can't see my chart. This is only for my website people. I came in, I'm looking to buy Path. I think the stock, now again, I think it's going higher today. I'm gambling on the Path earnings tonight. That's a loser idea because what do I know? I don't even know what this company does. And I've been in and out of it for 3.5 months now. Zero clue. I don't even know what industry they're in, but the stock pays me on a daily basis, weekly basis, monthly basis. I've sold puts on it. I bought calls. I swung it, swang it, or is it swang it or swung it? Swung it, swang it, either one. Both have worked. Everything about this trade has worked. So I'm sitting there, let's say I've made 6,000-7,000 trading Path over the last 3 months. And I still like it. So here's where I say, I'm going to do something dumb because I can afford to do something dumb. It's not like I'm going into it think I'm going to lose. I think the stock's going to $32 tonight. What? Yeah. I think it's consolidated. They had a great earnings report 3 months ago. It popped. It consolidated. It ripped. And then it rolled. And now it's ripped back. It's right where you want it. So if they report another good number, I think you're going to get the same type of 18% move that you got last time. And if it breaks out, finally, you're talking about $31.50. And if it gets through $31.50, you're talking $38. So for me, putting $2,000 on the name, I think it's not a bad idea. Now, what we have to decide what we're going to do here is if you buy options on Friday. So if you're buying options today that expire on Friday and the stock does nothing, it's going to be 100% loss. So what I'm going to do is I'm going to give it some time. I'm probably going to be buying April 25s for $2. Now, again, because it's a bad idea, not a bad idea based on the stock or the chart. It's just a bad idea. Buying options the day of earnings is a bad idea. Why? First reason, you're guessing. No idea what the stock's going to do tonight. Absolutely none. I've got none. Just based on the action from the 3 months, I think it's going up. That's it, right? I'm guessing. Second of all, I'm buying an option that is 30% overpriced right now because they have to factor in that this stock can move 15 or 20% tonight. So they're priced into the option. So you're overpaying, you're guessing, and you're overpaying for that option contract. And I'm still going to do it. That's why you call it gambling. Now, what I would like to see, and this might sound totally stupid, but remember CCC? We went into the report with the options, and the stock got smoked that morning. And then it turned around, and the same option I bought for 80 cents, I was able to buy at 20 cents the next day. And then they went back to $1.20. So the guy who bought them at, I think we were in some of them from 80. Sure, we made money because the stock had a massive comeback. That's the proper way to do it. Have your stock, again, let's say you own Path still from 17 bucks. They come out with a good number. The idea is that sometimes you'll get the sell-off. People want to take profit on the pop. They get those guys out of the way. Then the stock turns, and that turn gets the people that sold out prematurely, they want back in. The shorts that thought it was going to roll over and die, they have to cover because it's going back up. Then if it breaks the VWAP, the algorithms kick in and they start buying. And then if it breaks prior day VWAP, you got yourself a 1 minute multi-day VWAP reversal, and the trade hasn't failed yet this year, which is, and I don't know if you guys still think I'm joking. I have a trade that hasn't failed yet this year. It's a very specific setup, but when it shows up, not one loss. Why don't you just take that trade? I know. Why don't you just take that trade? I don't know. I say that to myself all the time. I'm an idiot. But I'll still buy stocks. And again, today's a good day, 3 for 3. I'm done. Made a little money on some very, I missed the path because I'm a greedy fuck. I'm waiting for this perfect price to buy it back. I think I'm going to get it. Hopefully it's flirting with 24 later so I can buy some cheaper. Made a little scratch on something called Zim. No idea what Zim is, but they reported earnings. Made $100 on that. SOUN, if you could believe, that stock's been pretty good. And, there's your day. So let's go back to the whole day trading versus swing versus investing. Obviously, the investors are doing extremely well. Market never goes down. If you've dollar cost averaged and you've held till right this second, you're awesome. Dow Jones, SPY, QQQ. Awesome, right? We never go down. The swing trader, a little bit more difficult because you have the intraday pops and drops, and sometimes you'll get stopped out and the stock will move. If your stops are too tight, swing trading is kind of difficult. But then you got day trading. And if you're just going to day trade and just try to make something on a daily basis, there's nobody on earth that can show you how to do this better than me. Because if you say there's a mistake to be made, I've made it. If there's something stupid to done, I've done it. If there's a trade that you think works better than VWAP, there isn't. Because I've tried every freaking thing. Stochastics, Bollinger Bands, Ichiro Clouds, Bollinger Bands, RSI retracements, 3-channel regression shits. None of it works. VWAP is the cleanest, most purest form of technical analysis I've ever seen in my life. Plus, there's a trade that works every time, and it's very specific. So again, you see a stock that's gapped down on earnings, and again, it's not always going to work, but when they don't work, your entry price is pretty damn good. So let's look at Dollar Tree for a second. I know you can't see my screen out there on YouTube world, but let's say you came in, Dollar Tree's getting smoked, right? And you're looking for a reason to buy it. When it broke the blue line, again, I wasn't even awake at 7 o'clock this morning, but you can get paid. It broke the first time it broke the blue line was 137.68, and the stock went to 139.68. That's 2 points. So let's say you bought 100 shares. That's $200. All right, cool. You got stopped out on the way back down. Then let's say you woke up at 7:50 and you said, hey, Dollar Tree just reported earnings. Hey, it's breaking VWAP. Let me buy it. Once again, you got another shot to buy it. And the reason buying at VWAP is good is that it's usually just a good price, even when you're wrong. So let's say you bought the VWAP break here at 137.68 again. The prices that it held on these two pullbacks are the prices that you're going to sell if you're wrong. But look at this one. This one, you got 137.50. You got up to 143. So that's two minimum trades. That's two trades that were clearly defined. Here's what I'm risking. Your reward is obviously unlimited. And then both times you had to get out of the trade. That's day trading. And what went from a decent, not decent, a decent long to a pretty good long became the sickest short when it rolled over, broke VWAP, and broke down under the price where the longs would have had their stops. So even though you didn't get it, let's say you didn't short it at 139.21, you could have shorted it when it rolled over at the 137.30, and it went down 11 points. What? Then you came in and you see, okay, that's been a pretty volatile morning. Looked like a decent long there for a second, but it couldn't stay above the VWAP. The shorts were still in control. So the idea usually is I like to buy stocks that are gap down on earnings that break VWAP. This one just could not break. So let's say you bought these little breaks. As soon as it starts to roll over, you know you're wrong. So you take small losses. It's okay to be wrong. You just don't stay wrong. But then you start to realize, wait a second. All right, this is going to be one of these where nobody wants to own it. It tests VWAP once, twice, 3, 4, 5 times. It couldn't get over it. That's sixth time that it tried to break. Maybe your brain finally says, hey, this thing's not working. I'm going to short it on the next time it attempts to break it. And you know what? You make some money on the trade. But once you understand the mechanics of the market and you understand risk reward, you'll see VWAP is it. And then you throw in multiple time frame VWAP and you're sitting pretty. So back to what I was saying, I wouldn't mind if path pops, drops, and then turns, because the pop, drop, and turn, the turn usually makes the stock go up threefold from the original move. So pop, drop, trap some shorts, get some people to sell out prematurely. They all went back in, breaks back over the VWAP. That's the best trade. And the reason I'm gambling on some path is that I've been in this name for 3 months now. I can't personally have this thing gapping up to $30 without being involved. Just in case. Just in case. The rare trade is called the gap and go. It's very rare to gap and go because the gap induces profit taking. But if the numbers are that good, if the stock is so coiled, like I think Path is, that it could have the gap and go, and you're not going to be able to get anything cheap. So I got to be in something. So I'm thinking April 25s, or, maybe somebody just suggested maybe go out to June. Let's see what the Junes cost. I think the April 25s are the only fairly priced ones. I think they were like 220. Well, I'm not in. I'm trying to buy April 5th, 25s for 220. I have 0 right now, but that's the one I'm buying. Gives me a little time to breathe. And if I'm wrong, it won't go to 0 immediately unless the stock goes to like $12 tonight. So even if we're wrong, I don't want to buy the ones that expire. Because if we're wrong and the stock tanks and you own stock and you own options that expire on Friday, you're done. It's 100% loss. Here, if we're wrong, stock goes down, let's say 2.5 points, sucks all day and just goes dormant, those April 25s, they'll be worth about $1.20. So you're only going to lose 1,000 on the 10 contracts. And that's what I'm probably going to do. So back to day trading, right? A lot of these things are paid for already. You know, like the original Carvana. I had no problem putting out some money on the Carvana because we killed that stock, you know, back when it was 1750. When that broke out, I was on the road. I remember that I was on my way to a funeral watching the stock ripping. I'm like, oh, God damn it. I wish I was at the desk right now. I'd be loading up. But I had some at 1750. When it broke 1750, that's when this whole monster move really began. And I used that money to start gambling on the, you know, I had a 35-50 call spread. Then I had and then I had a 50-70, and then I just had $70 calls. And just to be frank, who's Frank? I've lost $2,000 trading Rambus. So not Rambus. I've lost at least $2,000 trying to short Carvana over the last 3 or 4 days because I'm a fucking retard. Because I'm mad. And again, that is a typical shorter. When you see people bashing stocks, it's not like they know anything. They're just pissed that they don't own it. So they're just, this stock can't keep going up. It's a piece of shit. Blah, blah, blah. Most people that talk about shorting are not even short. Most people that talk about stocks that go down, that they think are going to crash, they're not involved. They're just angry because they didn't buy it, right? Just like the Bitcoin, right? Everybody hates Bitcoin now that they missed another 400% on it. By the way, who's in Algo X with me? Right? At $3, Scaramouche is telling us this thing at $3. Algo X is the one I own. That's the last coin I bought. Algo X. I was like, how do you not want to own a cryptocurrency? Because I buy them because of the name. And I was like, wait, Algo X, isn't the one Scaramucci was talking about? Oh, right. At $2.50 or $3, Scaramucci did this video where he said this is going to go up not just a little bit, 250,000%, he said. He didn't put a time frame on it, but he threw that shit out there. I was like, what? 250,000%? That's it? Okay, cool. And then it went from like 250 to 9 cents. Thanks. But at 9 cents, I was like, you know what? At 9 cents, you put in $1,000. Why not? What are you going to lose? $1,000? At 9 cents, I'm in. You know where this thing is now? 38 cents. It's awesome. Doggy coin, another one. 8 cents for the last year and a half. I bought more at 8 cents. This thing, I think it's at 22 now. I mean, this just it's the greatest market ever. People are flush with cash, no matter what you hear about the economy or whatever. People are. That's why inflation is here to stay. People are sitting with stupid amounts of money, spending it everywhere. I just got an airline ticket that cost me $300 5 years ago. I spent $870 on it to go to Nashville. It cost me $350 to get to Nashville a couple of years ago. It's $870 now. I'm in. I got no choice. What am I going to do? I got to get there. But this market right now, let's call it the Portnoy market. When this schmuck comes back and starts talking about trading again, you know we're nearing a short-term top. When day trading Dave is back. But the sick thing is the one call that he gave is up huge. That's the kind of market we're in right now. People are just looking for shiny shit to go and buy. Rum. He was talking about buying the stock at $6, and now it's at $9. And all you're going to hear about him chirping and chirping and chirping and chirping. Anything for clicks? I do. I have it all set up. I'm just a lazy dude. I have a laptop with OBS on it with all that stuff on there. My little face in the corner with the charts. Yeah, I got it. I just need the one last key ingredient. I don't know where to beam the stream to. I got to figure out what the key is, and I got to put it on the laptop and make sure all my wires are hooked up. I'm right there. 6 months from now, I'll finally probably get that to work. No, the reason is, again, I don't want to look at my dumb face either. That's why I have all this stuff to look at, right? By the way, it's just amazing amount of shit in my room. I cleaned the desk up, but what was my point? I was making a point right there. Oh, I want you to come to the website. Come hang out with my friends. You can see it's free. By the way, am I around tomorrow? And I'm not around tomorrow. But if you guys sign up, and if you're listening to me right now, this is the best free offer you're ever going to get in the history of Hit the Bid and Kenny Glick's lifetime. If you get the 2-week trial starting today, I'm doing a class where I'm going to sit on a Saturday. That's how much I love this shit. And I love helping people. 12 p.m. I think it's March 23rd. So if you sign up today for your 2-week trial, I'm going to let you sneak in the back door on a Saturday. And we're going to hang out and I'm going to crunch these charts. I'll take whatever chart you want to look at and I'll show you how VWAP is the greatest thing you'll ever see. I'll show you the exact setup that I love to use, where you're buying, where your stops are going to be, and how to how to calculate your risk versus reward, and how to become a consistent trader. And it would be the greatest 2 hours of your life. So Kenny Glick at AOL.com. Find me. Come see the charts, because it's definitely not about this face. I mean, some people think I'm a handsome, cute guy. I don't know. The dimples, they're like, I don't know. I look at myself and it's repulsive. I can't stand the sound of my voice or my face. I'm glad you guys tolerate it. Anyway, I'll see you guys soon. KennyGlick at AOL.com. Send me an email. I'll get you in. And we'll frolic on Saturday, and then you'll see. Start using VWAP. It'll change the way you trade. It'll change your life. Maybe even save it like it saved mine. All right? See ya.